The trader who survives long enough begins to notice a rhythm, not in the market but in themselves. The cycle of excitement, hope, fear, regret, and recovery plays again and again until it becomes familiar. With enough experience, the traps lose some of their surprise, though never their danger. The trader learns to recognize the tightening in the chest that signals fear, the rush of heat that signals greed, the restless impatience that signals boredom. These signals are not to be ignored. They are warnings. To trade successfully is to notice these inner alarms and act with discipline rather than impulse. Livermore's lesson was that the market does not break men, they break themselves by failing to master their own signals. To study the ticker is necessary, but to study the self is essential. Consider the trap of anticipation. Many traders fall into the habit of predicting what the market must do next. They speak with certainty about where prices will be tomorrow or next week. But anticipation breeds rigidity. When the market refuses to comply, the trader is caught and willing to abandon their forecast. The wiser trader observes rather than predicts, allowing the market to reveal itself step by step. Livermore was careful not to confuse expectation with reality. He allowed his positions to confirm themselves, scaling in only as the market moved in his favor. Anticipation is seductive because it flatters the ego. It feels powerful to believe one knows the future. Yet the market humbles forecasters endlessly, for its nature is to surprise. The antidote to anticipation is flexibility, the humility to admit that one does not know but can respond. Then there is the trap of external noise. Traders are bombarded with opinions, analysts, commentators, friends, strangers, all eager to share what the market will do. This noise seeps into the mind, eroding confidence in one's own plan. The trader wavers, second guesses, abandons their method in favor of someone else's conviction. Yet when the trade goes wrong, it is not the commentator who pays, but the trader. Livermore stressed the importance of independence. He listened, but he acted only on his own judgment. To rely on others is to surrender responsibility. And in markets, responsibility cannot be outsourced. The noise of the crowd is often a trap designed to lure traders into the wrong side. Independence is lonely, but it is also necessary. Another subtle danger is the trap of partial discipline. Many traders follow their rules most of the time, but make exceptions just this once. They bend their risk limit for a setup that looks too good, or they skip their stop because they are sure the market will turn. These small exceptions rarely destroy a trader instantly, but they build a habit of compromise. Over time, compromise erodes the very foundation of discipline. Livermore's successes came not from brilliance alone, but from strict adherence to his principles. Even when it was painful, the trader who allows small leaks in discipline will eventually face a flood. Rules are not suggestions, they are lifelines. To break them is to step willingly into the traps that have consumed generations. Hope remains perhaps the most dangerous of all. A losing trade is painful, but hope whispers that recovery is just a tick away. Hope encourages holding, then doubling, then refusing to see what is plain. The irony is that hope feels positive, but in markets it is corrosive. Livermore would remind us that markets are not personal, not moral, not bound to reward hope. They simply move. To hope is to delay the hard act of cutting a loss. The successful trader replaces hope with clarity, the willingness to exit quickly, to preserve capital, to live for another day. Without this discipline, hope becomes despair, and despair becomes ruin. Some traders fall prey to the trap of constant tinkering. They change their method after every loss, searching endlessly for a perfect system. They adjust rules, switch strategies, adopt new tools, believing the next one will finally unlock success. But this endless search prevents mastery. No system, however sound, can withstand constant alteration. Livermore himself refined his methods over years, but he did so with patience, testing carefully, not abandoning one approach for another in haste. The trap of tinkering is really a mask for insecurity, a refusal to accept that no system wins all the time. Mastery requires endurance through the losing periods as much as the winning ones. The trader who changes constantly never allows any method to prove itself. And then there is the trap of illusionary patterns. Human minds crave order, and traders often see patterns where none exist. They convince themselves that a shape on a chart guarantees a certain outcome, that a sequence of moves must repeat. Sometimes these patterns hold, but often they are illusions born of randomness. Believing too strongly in them leads to overconfidence and careless risk. Livermore observed price action carefully, but he never mistook a possibility for certainty. He knew that patterns were only as good as the discipline applied to them. The trap of illusions blinds the trader to the truth that the market is fluid, and what worked yesterday may fail tomorrow. The antidote is humility and constant testing. In truth, the emotional traps that destroy traders are not separate enemies, but a single adversary wearing many disguises. That adversary is the trader's own mind. The market merely provides the stage. Livermore's enduring wisdom lies not in a secret formula, but in this recognition that to trade successfully is to know oneself deeply. Without self-knowledge, greed becomes overtrading. Fear becomes paralysis, pride becomes stubbornness. Hope becomes disaster. With self-knowledge, these emotions can be managed, even harnessed. Greed can become ambition. Fear can become caution. Pride can become confidence. Hope can become perseverance. The difference lies not in the market but in the trader's mastery of themselves. When the final account is tallied, what destroys traders is rarely lack of opportunity. Markets will always provide opportunities, always rise and fall, always tempt and reward. What destroys traders is the failure to withstand temptation, to control reaction, to endure discipline. This is the great paradox of trading. The hardest battles are not fought on the screen, but in the mind. Livermore's life was proof of both the heights that discipline can reach and the depths that failure to maintain it can bring. His warnings are not abstract. They are carved from experience, written in profit and loss, in triumph and despair. They remain because they are true, not only for him but for every trader who steps into the arena. And so the lesson concludes, as it always does, the market will not change. But you must. The traps will not vanish, but you can learn to see them. Greed will whisper, fear will shout. Pride will strut, hope will cling, but discipline can stand against them. This is the legacy of Livermore's wisdom. The reminder that the market rewards not the cleverest, not the loudest, not the most confident, but the most disciplined. To trade without discipline is to walk blindfolded through a field of traps. To trade with discipline is to walk carefully, eyes open, step by step, avoiding what has destroyed so many. In the end, the choice is simple, though never easy. The traps will always wait. The question is whether you will fall, or whether you will walk past them, guided by patience, humility, and control. The emotional traps that destroy traders are not always sudden explosions of fear or greed, but often the slow erosion of discipline, the subtle whisper of temptation, and the endless search for shortcuts where none exist. As markets evolve and technology accelerates the speed of information, the pressures that once sat on the shoulders of floor traders now multiply through screens, apps, and social media. What once took weeks to unfold can now unravel in minutes, and those who lack control over their minds often find themselves swept away before they even recognize the storm. This is why Livermore's warnings echo louder today than ever before. The trap of overconfidence still waits to snare the beginner who mistakes a few lucky wins for genius, just as the trap of despair still hunts the veteran who has seen his capital dwindle and believes the game is rigged against him. These are not new dangers but ancient ones, dressed in modern clothing. They remind every trader that survival is not just about skill with charts or numbers, but about winning a daily battle with the mind that controls the hand placing each order. Consider the way many traders fall victim to revenge trading. After a loss, the emotions surge, and instead of stepping back, breathing and reflecting, they throw themselves into another position, determined to prove the marketron or to reclaim what was taken. This cycle is one of the cruelest traps, for the market is never wrong, only indifferent, and yet the trader, blinded by pride, sees it as an enemy to be conquered. The result is often ruin, not because the setup was weak, but because the mindset was broken. Livermore himself warned against this pattern, noting that the moment a trader begins to fight the tape, they have already lost. Each trade should be executed as if it stands alone, judged by its own merits, not by the shadow of yesterday's pain or yesterday's triumph. The refusal to detach from the past is the chain that drags countless traders into the abyss, even when they hold strategies that might otherwise succeed. The trap of impatience is another silent killer of careers. Markets can remain quiet for long stretches, moving sideways, offering nothing but noise. During these times, the disciplined trader waits, protecting capital, sharpening his observations, and preserving energy. The undisciplined trader, however, cannot resist the itch to act. They convince themselves that action itself is progress, that pressing the button means they are still in the game. In truth, they are bleeding slowly, death by 1,000 small losses, all because they could not accept that sometimes the best trade is no trade at all. Livermore's own wisdom captured this with brutal clarity. It was not just about knowing when to enter, when to exit, but also when to stay completely out. The patience to sit still, to do nothing when nothing is to be done, separates those who build wealth from those who spend years circling the same drain. Fear often disguises itself as caution, but in trading, it can be just as destructive as recklessness. Traders who fear loss above all else may hesitate at the crucial moment, entering too late or exiting too soon. Their charts and analysis may be sound, but their execution betrays them, as if their own hand cannot follow the instructions of their brain. This fear-driven hesitation ensures that they buy at higher prices and sell at lower ones, eroding their edge until nothing remains. Ironically, this fear does not protect them but ensures the very losses they hope to avoid. Livermore understood this paradox. Intimately, markets reward courage backed by preparation, not cowardice dressed as prudence. Without the courage to act decisively when the setup aligns, even the best strategy is nothing but theory, wasted on someone who cannot pull the trigger.